Almost 4 in 10 drivers already suspect they're overpaying for car insurance. Only about 1 in 10 actually did anything about it this year. Quick note, not financial advice, just what that gap is actually worth, in real dollars, over a real amount of time. The renewal notice shows up in the mailbox in that same envelope it always comes in, with a new total that's a little higher than last year's, sitting right next to a due date. Nobody opens it expecting news. Most people scan for the payment amount, confirm it's roughly what they expected, and set up the payment the same way they did last year. The letter isn't hiding anything, it's just banking on the fact that almost nobody reads it closely enough to ask why the number moved. The national average for full coverage runs somewhere around $2,300 a year right now, a little under $190 a month. That number by itself isn't the problem. The problem is how much it can vary for the exact same driver, on the exact same car, depending only on which company happens to be quoting it that particular week. One comparison found identical coverage priced anywhere from under $4,000 a year to over $8,000, purely based on which insurer was asked. Here's the part that renewal letter never explains. Insurers routinely charge brand new customers less than they charge the customers who've been with them for years for the exact same coverage. It's sometimes called a loyalty penalty, and as of this year it's sitting at an all-time high. The pricing isn't random either. Some insurers run the numbers on exactly how much a long-term customer will tolerate before finally shopping around, and set the renewal price right up against that line. Think about what that actually means in practice. Somewhere, a system has effectively calculated the exact dollar amount a customer who's stayed for 6 years is likely to accept without complaint. A number just below annoyed enough to call around, and just above the bare minimum the company would take to keep the account. The renewal letter isn't wrong or dishonest exactly. It's just priced by an algorithm that already knows most people won't check. A couple renews their policy every year without a second thought, the same way they've done since they got married. A neighbor mentions, almost in passing, that switching companies last spring knocked over $400 off her yearly premium for what turned out to be nearly identical coverage. It doesn't register as urgent information in the moment, just a mildly interesting fact about someone else's paperwork. It takes another renewal notice a few months later before the comparison actually crosses their mind. That night, pulling up 3 quotes online takes about the time it takes to watch one episode of something. Same coverage limits, same deductible, typed into 3 different forms. 2 of the 3 numbers come back lower than what's currently being paid. There's a specific, slightly irritating realization that follows. Not that the new price is better, but that it clearly could have been the price all along, for however many renewals it wasn't. The data backs up exactly what that neighbor stumbled into. In a recent industry survey, 92% of people who actually switched car insurance providers reported saving money, and 63% saved at least $100 a year doing it. New customers in many cases get offered discounts worth up to 30% off the base premium, just for being new. Despite that, only about 12% of people with car insurance switched providers in the past year. Roughly half say they're stressed about what they're paying. Almost none of them do the thing that would actually change the number. There's a specific kind of financial stress that never resolves itself, and this is a textbook version of it. The premium goes up, there's a flash of frustration reading the new total, and then the payment gets set up anyway because the alternative is an afternoon spent on hold with 3 different call centers. Being stressed about a bill and being willing to spend 20 minutes fixing it turn out to be 2 completely different things, and most people, most years, only ever manage the first one. So what is that gap actually worth, compounded over time rather than looked at one renewal at a time? Take a fairly conservative estimate. Overpaying by around $285 a year toward the low end of what shopping around typically saves a driver. Run that $285 a year through a 7% average annual market return. The same standard long-term assumption used everywhere else on this channel, for 25 years, and it compounds to just over $18,000. Not a dramatic number to look at in any single year. A genuinely large number once it's had 2.5 decades to work. $285 a year works out to less than $24 a month, less than a single streaming subscription, less than most people spend on coffee in a week. That's exactly what makes it so easy to compound for decades without anyone noticing. The number is genuinely too small, month to month, to ever feel like an emergency. It only becomes a big number once it's had 25 years and a market return quietly working on it in the background. Picture someone in their late 20s setting up autopay on their first car insurance policy. mostly relieved to have one thing in adulthood fully handled. That policy renews quietly every single year after that, through an apartment move, a wedding, 2 different cars, a mortgage. At no point does a single renewal feel like the moment to comparison shop. Each one, on its own, is a completely reasonable thing to let slide. 25 of them stacked together is a different story entirely. By year 12 or so, the original policy has been through 3 different agents, none of whom ever called to say a better rate might be available now that the driving record is cleaner and the car is older. The couple has by this point comparison shopped a mortgage, a phone plan, and a handful of vacations down to the dollar. The insurance renewal is the one bill that's been running on autopilot since the very first year, simply because it never demanded attention the way the others did. The reason this particular bill escapes scrutiny more than most isn't complicated. It's not optional. Every state requires some form of it, so the payment itself never feels like a choice being made. And it doesn't fluctuate wildly month to month, the way a grocery bill or a utility bill does, so there's no jarring number to trigger a closer look. It just quietly renews, a little higher each year, and blends into the category of bills nobody actively manages, just pays. This isn't unique to car insurance either. It's the same shape as almost every recurring bill that never gets revisited. The gym membership charging the same amount whether it gets used or not, the streaming subscription nobody remembers signing up for, the phone plan that was competitive 3 carriers of promotions ago. Car insurance just tends to be one of the larger numbers hiding inside that pattern, because the premiums themselves are bigger to begin with, and because switching feels like it requires more effort than cancelling an app. Open a banking app on any given month, and the streaming charge, the gym charge, and the insurance premium all sit in the same list, treated with roughly the same level of attention, which is to say, almost none. The streaming service is $5. The insurance premium is $190. They get scrolled past with the exact same speed because by the time a bill has renewed itself a dozen times without incident, the brain quietly stops treating it as a decision at all. None of this is a case against having insurance, obviously. Coverage exists for a real reason, and the risk it protects against is real. The case is narrower than that, paying meaningfully more than a new customer would pay for identical coverage, purely because renewing quietly takes less effort than requesting a few quotes once a year. That's not the cost of being insured, that's the cost of never checking. 2 people can have identical cars, identical driving records, identical coverage, and pay noticeably different amounts every single month for it. Not because one of them is a worse risk, but because one of them made a phone call the other one kept meaning to make. From the outside, both of their cars look exactly the same in the driveway. The only visible difference is which one of them opened the renewal letter that one particular year and actually did something with it. The fix here doesn't ask for much. It's not switching every single year, or chasing every last dollar across a dozen quotes. It's closer to a once-a-year, 20-minute habit, pulling a couple of comparison quotes around renewal time and either using them to negotiate the existing policy down, or actually switching if the gap is real. Most people who've done this once say the same thing afterward. It took less time than they expected, for more money than they expected. Some people call the current insurer first, quote in hand, and just ask directly whether that price can be matched. It's a short, slightly awkward phone call, the kind that takes maybe 10 minutes and ends either with a lower number or a polite no. Either answer is useful. One saves money immediately. The other one at least confirms it's time to actually switch, instead of guessing. Here's the thread underneath this one, same as it is underneath most of the hidden costs on this channel. The expensive version of any decision rarely announces itself as expensive. It just looks like the version that requires nothing from you this month. No phone calls, no comparison shopping, no mildly annoying 20 minutes. The cheaper version always asks for a little effort up front. The gap between the two, left alone for long enough, is where the real money quietly goes. None of this means insurance companies are villains, or that every renewal notice is secretly a trap. Prices go up across an entire industry sometimes for real reasons. More accidents, more expensive repairs, more expensive cars on the road. The part that's actually optional is not the price increase itself. It's whether that increase ever gets checked against what a new customer, with the exact same driving record, would be offered to sign up tomorrow. If this is the kind of thing you think about, stick around. That's basically what this channel is. And before you go, when's the last time you actually shopped your car insurance around? Tell me in the comments. I read everyone.